What's going on, investors? AK from Fallible here. You know, everybody has been so negative about this bull market. It's probably one of the most hated bull markets we've ever had. We just got a bunch of bears, just a sea of bears, just swimming around and petting each other and expecting the crash to come at any moment. You know, sometimes it feels like our Fallible community are the only bulls around. We're like that single rose that grew through the concrete. We're like that one brown chip in that entire bag of Chex Mix. It's not that dramatic, but the point is that even though we've been right all this time, we still got to go back and check the data to make sure that we're going to continue being right in the future. Because we're fallible, right? We could be wrong at any time. So we got to continually look at the data and make sure we are on the right side of the market. So today, in this video, we're going to go over a bunch of charts to make sure that the bull is still intact. And I know some of you are probably excited to see a full video of charts because you get tired of looking at my beautiful face all the time, thinking, oh, I wish I was as good looking as AK. Don't worry, you're good looking too. And at the end of this video, we're also going to do a quick update on JD.com because a lot of you have been commenting asking what's going on. It's been getting smashed recently, but is it still a good investment? The short answer is yes, but I'll explain more in this video. Okay, so the bull case. So the first thing we want to check is financial conditions. And by that, I mean liquidity. So if you look at this chart, that yellow line tracks liquidity, while the blue line is the S&P 500. And you can see that they pretty much move together. So in the US, the liquidity is pretty flush, while in other places it's tightening up. And when you have a lot of liquidity, that's bullish for stocks. And liquidity is important because remember, it's the #1 indicator we want to look at for the market. Because think about it, the more money you have in our economy and system, that means more money in each individual's pockets. And what do people do when they got money in their pockets? They gotta spend it, right? And that spending means you're either buying products that companies sell or you're investing in US assets themselves. Either way, that's gonna push the market higher. And I've talked about liquidity a lot on this channel, especially in regards to the Federal Reserve. I actually did a whole Fed series, which if you haven't seen, I'll link to above. Check that out. Next, we can look at the rate of change in yields. So the rate of change has actually slowed down a bit, which is great for stocks. Because really, you don't want interest rates jumping too high too quick, because that has a negative effect on liquidity. You can also look at rate of change in inflation, which is starting to look a little perky actually. So we got to keep an eye on that, but the current reading is neutral and bullish for stocks. And this is important because positive inflation surprises causes shocks to the bond market. And those shocks is what drives yields higher and sucks capital out of stocks, which is obviously a negative for the markets. But right now, things look good. Sentiment also looks good. Right here's a sentiment survey that's perfect to gauge short to intermediate term sentiment. So recently it moved back down to 33%, which is great for stocks. When it's above 40%, that's when you need to start looking for a correction. Now, another way to look at sentiment is advisor sentiment. This is a longer term indicator. When it's above 60%, that's actually excessive bullishness and we should expect a correction to come soon. But right now it's at 57%, which is good for stocks. See, sentiment is kind of like a contra indicator. See, if there are too many people that are too bullish and too excited, then that means there's not many buyers left to come into the market. And if everyone's already bought, who's going to be pushing prices higher from here? So that's actually why we like a sea of bears. The more bearish people there are, that means that there's just more people that need to convert later into buyers. So there's still fuel left for the market. If we look at the percentage of stocks trading above the 50-day moving average, it's at about 50% right now. So this is a neutral reading and it's supportive of stocks going higher. See, when you hit that 70% level of stocks trading above their 50 DMA, that's when the market becomes technically overextended and then you should see a pullback. And from a pure technical standpoint, all the indices look pretty good. Just recently, the Russell broke out of its bull flag, which signals that the rest of the market should trend higher too. S&P hit new highs as well. All right, now JD.com, which everyone has been asking about in the comments of all my videos recently. And we've explained the bull thesis in JD before, which if you haven't seen those videos, I'll link to them above. So yeah, if you look at JD's chart, it looks pretty ugly. And that's because all these Chinese stocks have been getting killed because of macro. So the trade wars with Trump and the fears of China's leader becoming a true dictator, that's all been pushing these Chinese stocks lower. And these are legitimate concerns, but they are a worst case scenario. So if the worst case scenario doesn't happen, then something like JD is one of the most undervalued stocks in the world right now. And if you looked at their latest earnings report, it was great. And now with how much it's been beaten down, JD is trading for just 0.8 times sales with its average revenue growth of over 30%. That's a crazy discrepancy. And it's here where you could really get the stock for cheap for when it rebounds. So right now we're looking at buying more long-term calls in it. So the short answer is yes, we're still very bullish on JD.com. Okay, if you like that video, make sure you subscribe to this channel and hit that bell for notifications of future videos. We make about 3 a week, all stock market related. So subscribe and I'll see you in the next video. Stay fallible out there. Bye.